Hi traders and welcome to the Technical Analysis Market Wrap on the 20th of November. So we've seen a pretty steady market this week. Everything's been hovering around in the ranges that we probably expected from last week really, which has provided some pretty good trading opportunities. So we'll jump straight in and see what's happening and what we could take advantage of today and early into next week. So let's start out with the Aussie USD. This one's maintained a really good range. You can see here that we've got some basically what's trying to make a new higher high. It's really trying, but it's failed. This resistance point has been in place for a little while. You can see even though the 74 cents is at the top of the range, if we draw a line just pretty much where price is right now, you can see that this level here at around that sort of 73, sort of 15 area, 10 to 15 area, has been very solid for it. So even though it didn't quite reach the heights of the 74, it has maintained this 73 sort of 15 level. It's really struggled to get above here, which is probably, it's showing signs that it's starting to get a little bit tired. The moving averages are still starting to separate here on the daily, but what you want to be doing here is probably, not preempting the break, really probably trading the retrace. So if we get a bit of a pullback, I'll drop it down to a smaller time frame to give you a bit of an idea of what I'm talking about. On the daily, it looks a little bit more extreme, as you can see, but here it's very clear. You can see the resistance right through there. All we're looking for now is if we're going to scalp this one, which is probably what we want to be doing, we're not going for any big long moves at the moment because it hasn't really given us that sign. We're going to be basically trying to trade it into that sort of 73.20 area. So up to the green line here, 73.15 is the real first point of resistance. It's not a lot of pips. It's only about 20 pips pretty much from where we are now, but that's just the game that we're in. My preferred trade here is actually the short. It's already tested the resistance and failed to do so or to get through it. So now what we want to do is probably see if we can break it down to the bottom side. So maybe take some shorts as soon as we see a series of lower highs and lower lows. If we've got our high here at the resistance point, you can see that we've got the low. If it sells off the 20 here and makes a new low, and we want to see a close on the 4 hour, right? So it's got to be a reasonable time frame. If we get a close below here on the 4 hour, now that it's had that little mini pullback, then we've got our series of lower highs and lower lows that we're looking for, the lightning bolt, and then we can hopefully push it down. And probably the 200 will be the first target. You can see here the 200 on the 4 hour is around that. By the time that price reaches there, it's probably going to be around the 72. So, it's a reasonable move. It's probably about 80 pips. So it's definitely a reasonable scalp to take advantage of if it plays the game. But it does need to make that lower low here. So you can see the lightning bolt effect, a lower low on the 4 hour chart, and we'll be happy to trade it to the 200. That'll play the game quite nicely. All right, we'll move on to the US dollar CAD. This one's really trying hard to hold this support level. We've been talking about it for the last week and a bit now. So it's tested the 20 on the daily here. You can see it's pulled back off it, but hasn't really pushed down all the way down to the 130 again. A lot of people are waiting for it to get there to take longs again. I'm not sure it's going to get there. It looks like it really wants to break this 20 moving average. Now, until it does, it's going to be a difficult trade, but this is probably the opposite of what the Aussie is doing. It's at support. We need to see a break of these levels. Now, if we get a higher high here, it's going to show that on the daily we've broken the 20 moving average. Well, it has to get into a newer high, and it'll also break the 50. And then we've got open sky really. It's going to have a little bit of resistance at this point here around the 132.30 area. But in saying that, as soon as it makes the higher high, our higher low sequence, I'd be happy to get involved in this trade because I think the first point of real resistance is going to be around that 133.80, which is a pretty reasonable move. So it's a bit of a swing trade, this one. I'm not so sure I want to be scalping it, but the MACD is telling us that it's coming out of the histogram, which is good. We want to see the lightning bolt effect, okay? Off support, lightning bolts off support or off resistance, as in the case with the Aussie, are always the best ones to trade because they're the ones that are usually coming up with momentum off a really good level. So you definitely want to keep an eye on this one. Set your alerts for a break above probably the 131.80 is where you need to be. That'll break away from all of these moving averages. It'll have the lightning bolt effect then on the daily, and that'll open us right up for about 200 pips. So could be a really good trade, this one. So we'll move on now to the all-important dollar index. This one's fighting for a survival, really. I think everybody knows how important this 92 level is. I mean, it's been very, very important in the past, obviously. And it's a real catalyst. If this happens to get down below this 92 and close on a serious time frame like the daily, it's got a long way to fall, the dollar index. So it is definitely fighting for survival. You can see these last four candles, last five candles really have all been fairly bearish. It's tried to push up, and the sellers have certainly won the war nearly every time on the last 3 or 4 days of trading. But it's still holding. The support is there, and we're not going to preempt a break of support until it does actually break it. We're not going to do anything on this one. It has to break the support before we trade it. I'm not that inclined to trade the first break. When it's a very, very serious level of support, I'd be more inclined to actually wait for the break and a retest of the bottom. Generally, what you find is when it is a very important zone like this one is, I'll draw some arrows and actually show you what I mean. Generally, what you'll see happen is you'll see that sort of effect, and then it'll come back and test it from the bottom. That's what we call a roll reversal, as you all know. When we see that roll reversal zone at a very, very important support level, like we can see here, that's probably the better trade. This has got a long way to fall, right? Like if it does break the 92, it's got probably 88 in its sights. That's what I guess that's probably where its real zone is after this 92, which is obviously a very important one. So there's plenty of points to be had. You don't want to be preempting the jump. You want to see a close below here at the very, very least before we trade this one. But probably just as importantly, I think I would wait for it to break and then come up and retest it. Sometimes you miss them, sometimes they don't come back, but most of the time, if it's a really, really good support level, you will see that pullback, and it's very, very important because the roll reversal is actually the better trade, because then you have got confirmation. Okay, so let's move on to the Euro USD. This one here has been a bit of a range bound again. You can see the channel that we've been trading for a long, long time now, still playing the game. It doesn't want to actually, come back really, does it? Like, it looks like it wants to keep pushing the tops. The thing is, this is obviously doing the opposite of what the dollar index is doing. This resistance that you're seeing is the very same support on the dollar index, basically just inverted. And this one, although this one is actually, not really breaking through the tops here, it does look stronger, and you can see here even today's candle, like I'll blow it up, you can even here it's come back down, nearly touched the 20, and the buyers have really taken control of this one again and really started to push it up. It does look like it's going to be a difficult short. It needs to do a fair bit of work to actually take the short on this one. And with the way its price action is doing, especially in the later part of the New York session, it doesn't look like it's falling anytime soon. But in saying that, it's got a lot of headwind in front of it. I'm not even sure this is actually a really good trade. This is probably not one that I'd be jumping into feet first, because realistically, you've got an awful lot of trouble right in front of you at the 119. And right behind you, you've got even for the short, you've got moving averages everywhere. You got support and resistance zones all the way down, even all the way down to 118. It's proving to be a bit of a problem. Like, it hasn't really, even here, it couldn't quite get to the 118, and before it's completely rejected. So the power seems to be with the long, but the problem is, there's not a lot of room between the entry point, if you're entering now, and the first point of resistance. So I'd probably be more inclined to leave this one alone and just let this one play out. If it does happen to break the 119, again, I wouldn't be taking the first break on it. You can see we've had a few fake outs here already. I'd be waiting for the retest. So I'd want to see a breakout, the very same effect that we saw on the dollar index, and just wait for it to come back, retest in 119 from above it, and then it's a really good long trade. That's when we'll be looking at a pretty reasonable change of trend that's going to go probably places maybe to the 120 to 122. So there's plenty of room up there once it does break this zone, but the zone has to be broken before we get excited about this one. All right, we'll move on to the pound USD. So this one here is showing a lot of strength as well. And this is a really interesting one because it is giving us our higher highs and higher lows that we've been looking for a while now. It's trading above the moving averages, which is awesome. But again, this has got a very serious level to break. Now, if it does break this level, it's showing a very similar price action to what the euro is doing, which isn't really a surprise. But this one looks stronger to me. And with this testing the 132, as you can see, this candle tested it. If we get above this and have a daily break above that one sort of 33.20 area, which is what I want to see, that will give us the lightning bolt completion that we want. That's going to open it right up to the 134, high 134 to 135. 135. That would be the target for this one, and it's a pretty good target at that. So we want to see a break of this level. It's very, very important that we wait for price action here and not try and preempt it. We can definitely try and scalp on the smaller time frames to these zones, which is fine if there's enough room to do so. You need enough pips, of course, and there probably is in this instance. So, the area I'm talking about is right there. We have to have a break of that zone. But if you go down to maybe a 15-minute chart, that leaves a fair bit of room to actually get there. You can see that there's quite a bit of room up there, but the 15 minutes got its own challenges. You can see that the 200's been pulling it up on the 15-minute. If we get a break above this level here, we've got a moving average cross, which is good. The 20's crossed the 50, and MACD is looking very, very strong. So if we get a 15-minute close above this level here, that's a definite good scalping opportunity to aim for as part of the bigger trade, because that's the part that we need to break before we go for the 134 to 135 area. So we can scalp it up to that level if we get the price action we need on the 15-minute, but that's a different trade. I must emphasize it's a very different trade to the big one. So if you're going to take the scalp, it's a very small stop loss. You can aim for the 133, which is a pretty reasonable trade from here. It's about, by the time it breaks, it'll probably be about 40 to 45 pips. But the real trade here, the swing trade, is the break of this level, which is the take profit of the scalp, and then we're looking for the big move up to around the 134.80. All right, the last one we'll have a look at today is the Aussie 200. This has been extraordinarily strong this week and even last week. It's been a very, very strong fortnight for this one with very, very little pullbacks. Now, it's an interesting one because you think to yourself, well, it's not really, it's setting its own path at the moment, but it has had a very, very strong buying week. And generally, a pattern of what happens when we have a couple of very strong weeks is we get a bit of a pullback on a Friday. So it wouldn't surprise me at all. We've got a big separation from the moving average, from the 20 moving average. We haven't had this separation for quite some time now. Like you can see, even in the history here, it's been touching the 20s for a long time. Every half a dozen candles. It's been a long time between touches now. It is a Friday. It wouldn't surprise me at all to probably see this come back down and touch the 20. Could be a long from there. I'm not convinced it's going short. I mean, it's broken out of this range here. There's no question about that. But it looks like it's starting to get a little bit tired on the smaller time frame. So I'm thinking that although this daily is a little bit strong at the moment, this is after hours market. So it'll be interesting to see what happens in the Australian session today. But I would probably expect to see a little bit of weakness and maybe pull back to the 20. That would be an ideal reload zone. If it does come back to the 20, that would be great. If it comes back to the 6200, that's the real reload zone. That would be a fantastic result because that's there's extraordinary resistance here, and that will become very, very strong support if it happens to get back down there. It's a long way to go. I'm not convinced it will. It'll take a catalyst to get it there, but I'm not sure what that catalyst will be. So I would be thinking that the 20 would be the logical target for a pullback. So probably around, by the time the price gets there, the moving average will probably creep up to around the 63.50. That's where I'd expect the 20 moving average to be by the time it comes back. But that, to me, seems like the better trade because overextended markets generally don't continue. And if they do continue, even if you're part of it, there's a lot of nervousness about it. And where do you put your stop? The problem with this trade is, you have to have a reasonable stop behind the last swing, and the last swing's a long, long way away. So you're taking what is effectively unknown territory for the long with a very big stop loss. So it doesn't make sense to go long, even though it may push a bit longer. Wait for the pullback on this one. If we get the pullback, then we can trade on the pullback. We've got a lot smaller stop loss at that point, and obviously a lot clearer target to aim for. All right, so I hope everybody's had a great week's trading. We've had some really good opportunities because the markets have been effectively range-bound with a couple of small breaks of zones that have given us some good opportunities. So hopefully you're able to take advantage of that. Have a great weekend, and I look forward to seeing you all next week.